Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for June 17th, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Where we last left off, price was selling off significantly. In the trading room, we were looking to see how low we could go. We obviously had 52s on the board and the 2040 quarters on the board as well, 2040s. And price got, within a tick or two of that bottom end of 2040, hit the 2040s on the top end. And then we saw a VPOC shift up. So a composite VPOC shift up occurred to 2044. We saw that occur intraday. And when that happened, we were thinking that could be the end of that move, at least short term. And it turned out to be an aggressive rally the opposite way. So a big time push up. What I told our traders yesterday was, expect more chop in this zone right here. So once you get from rejection and you come back to acceptance, you're typically going to trade this a little while at times. Even if it looks bullish the first day, we could still see another day or two or three even in this area before we either resolve back up or roll a little bit lower. Anytime you get to the peak of a distribution, so up here we get to the peak of this distribution, it becomes a much more difficult trade. That's why we were stalking and hunting a sell opportunity from rejection above 2100 back to value. That was the primary move. That's the primary trade, and it was completed yesterday. And now we have to see how this thing plays out from here. We obviously have the previous week's low that was already defended at 79.5. That's going to continue to be defended as well by bears looking to re-engage that HVN down below. Any push and acceptance back above 2079s can get this thing going to the upside again. But right now the expectation is that anytime we're around an HVN like this, there could be more chop back and forth around this area. All right, let's take a look at crude oil. Here's crude oil, a significant sell-off that we've seen here, and price pushed through the 47.61s, just a big-time continuation the prior session. You can even see right here, we're getting a breach of the lower PivotBoss PIMA level, which is the PIMA 55, and that level is being violated here. So we've got a significant pullback. One thing we talked about before is that if or should that 47.22 give way, you are likely going to see a continuation into the next HVN below, which is 40.72s. So right there, we could be looking at a continuation back downward. We are having a bit of a changeover on some of the contracts now, since we are moving to the new front contract coming up, which is August very, very soon, in the next day or two. So some of these levels have changed a little bit. Right now, this LVN, which is 47.75, that's going to be very important right there. So when price comes into that LVN, 47.75, watch it very closely. If bears defend it, you could see a continuation toward the HVN below. Back above that level likely shoots price back across the range. So overall, price has been quite bullish within the current uptrending market. I still believe that crude is bullish, but we need to find where that bottom is of the pullback. It could be as low as the 44.72s that we marked below. It could be down as low as that or the previous month's low. We'll see where it goes. But overall, this thing has been a very nice, solid, uptrending market here. Very, very clean channel that we've seen so far. The expectation is once we do find a low, we're likely going to go back across the range and test the 43.40s. Rather, the 53.40s. All right, let's take a look at gold here. Gold saw a significant rejection. This is something that we were talking about before. What I mentioned was that if price pushes beyond the 1308s here and sees some type of expansion attempt and fails, that's when we could be looking at some sort of move back toward value, back towards 69.5, which is the center point of the key range, and back to value, which is 1238.5. So we could be looking at a move back toward those levels, given what we just saw. We saw a push into 1318, 1320, a major rejection occurred, and a big time push back below the 1299s and a close back below that level. That's typically very indicative of a rejection. You do have some bulls defending here. You have a little bit of an absorption signature that could develop off of 1299, 1300s. So one thing to watch out for is how does price respond when 1300 comes back on board. Once you see that move, you could begin to see bears defending at that area ahead of a push towards 69 and 38.5. Now, one thing to keep in mind with this 1308.30 right here is very similar to that 1208.30 down below, right? Once you get that rejection and you fail, the implication is not only that you go back to the midpoint of the range, you usually go across the range back toward the opposite side being 1230.08 of that range, and then of course you have the 1308 down below. Now, one thing that we talked about before was that if we do get a rejection on these highs to pair with this rejection on these lows, we can now look for a midpoint of that range to identify a potential key range formation. So if you take this low here at 1201.5, let's go ahead and do that. Let's draw a fib retracement and just look to see what that midpoint is. So if we take it from 1201.5 here and bring it up, yesterday's high being around 19s, so we got 1260. So that would be the midpoint of this range. So that's usually what our traders do in the trading room, is we look for the impulse high, impulse low, we mark that midpoint, and now we're looking for that midpoint to be tested, and now we have key ranges to watch here for the upcoming period of time. So that could be a very, very important range to watch as we move forward. Okay, lastly, let's take a look at the NQ. This one obviously saw a significant meltdown in the previous session below 43.89.5. This is the level I mentioned bulls really needed to defend. Price had gotten much below that level, but by the end of the day, it closed back above it. And so right there, that's bullish. We do have a little bit of a signature developing here off to the left and right now. So if price comes down into 89s again, that could still be an area to defend. Bears are defending the top end of this range here off of 44.34.75. So defending here, defending here, defending here, that tells you that there are buy stops above that level. So on the next push downward, it could be a great opportunity to defend for the next day or even two, ahead of a potential squeeze through 44.34s and into the next HVN and highs above. So that's what we're looking for. We're going to see how this thing plays out. We know that there are buy stops above this level, so it'd be a good idea to squeeze them. And bulls are currently defending after seeing a major rejection here. They're defending off of 43.89.5. So that's where bulls want to defend and squeeze through these upper levels. Bears are looking to defend here, to drop down through the tail of this rejection day, and then bring it back toward 4,300. So that's the kind of approach right now that's happening and developing on both sides of the range. I tend to favor that we may move right back up after the recent decline. All right, let's see how this thing plays out heading into the rest of the session. Good luck, trade well, and happy Friday.